In part 2, you learned what Forex is: pairs, pips, spread, leverage, and risk. Now we need to answer a big question. What pairs should you actually watch? Because the truth is, if you try to watch everything, you're going to learn nothing. A beginner does not need 30 charts. In fact, having too many pairs creates confusion and leads to overtrading. Our goal is repetition, seeing the same few pairs every single day so you can truly learn their behavior. So, what makes a pair beginner-friendly? First, it needs high liquidity, meaning there are plenty of buyers and sellers. You also want tighter spreads to keep costs low and clean chart behavior so patterns are easier to spot. This is where major pairs come in. These include the US dollar paired with the world's most stable global currencies. These are the best starting points because they usually have the highest liquidity and the lowest spreads for new traders. I recommend starting with just 3: EUR/USD, GBP/USD, and USD/JPY. Let's break down why. EUR/USD is the most watched pair in the world. It usually has the tightest spreads, making it a perfect learning pair. Because so many people trade it, the movement is often cleaner, and there are endless educational examples to follow. Next is GBP/USD. This pair can move more than the euro, offering stronger opportunities but requiring more focus. It can be more volatile, so your risk must be smaller, and your stop losses need to make sense for the movement. Third is USD/JPY. It's unique because the pip format looks different, using the second decimal place instead of the fourth. It can trend very cleanly for long periods, but be careful, it can move fast when there is big news in Japan or the US. Then we have minor pairs or crosses. These are major currencies paired together without the US dollar involved. They can be tradable later, but as a beginner, don't start here. They move differently and often have wider spreads. Exotic pairs include emerging currencies. These are the danger zone for beginners. You should avoid them for now. They have huge spreads and low liquidity, meaning price can jump and cause bigger losses than you planned for. Look at this spread comparison. If the spread is too wide, the trade has to work much harder just to break even. Think of liquidity like a busy highway. With many cars, everyone moves smoothly. That's what you want in a trade. Low liquidity is like a narrow road. One big order can make the price jump uncontrollably. Avoid those narrow roads. Then there's volatility, how much price moves. If it doesn't move at all, there's no opportunity to make a profit. But too much chaos is hard to manage. Your goal is the Goldilocks zone, enough movement to trade, but not total chaos. Forex is all about relative strength. A pair moves because one currency is gaining power while the other is losing it. If the euro is strong and the dollar is weak, EUR/USD goes up. It's like a scoreboard for global economies. If the pound is weak and the dollar is strong, GBP/USD falls. This is a filter to help you choose your direction. But remember, strength is just a filter, not a reason to click buy. We'll get into the actual entries in part 4. Here is your golden rule. For the first 90 days, only watch 2 or 3 pairs. Stick to the majors we discussed. Every day, check your watch list. Note the current trend, check if the spread is normal, and see if there's major news. Ask yourself, is the chart clean or messy? And did the big move already happen while you were sleeping? A clean chart has obvious direction and clear pullbacks. It's easy to read and follows a logical path. A messy chart is just sideways noise. If the candles are tangled and overlapping, just skip it. Don't force a trade. The more pairs you watch, the more likely you are to force a trade just because you're bored. That's a trap. A serious trader waits for the perfect setup. A bored trader just clicks on random charts and loses money. Let's recap. Start with major pairs and focus on just 2 or 3. Never trade exotics as a beginner. Always check the spread before you enter, avoid messy charts, and keep an eye on the news calendar. Now for your assignment. For the next 5 days, open your demo platform and watch EUR/USD, GBP/USD, and USD/JPY. Write down if they are clean or messy, check the spread, and look for news. Pick the cleanest one, but don't trade yet. The goal is to know your few pairs so well that the clean setups start to stand out like a neon sign. In part 4, we'll learn to read trends. Once you know what to watch, the next question is buy, sell, or skip. Remember, this is educational only. Forex is risky. Practice on demo first and follow all local laws and rules.